Good evening, students.
Good evening, sir.
Sorry for delay. For me, today we should finish the 5 o'clock because I have another work after the 5. Shall we start now?
Yes, sir.
Okay. Today we are discussing, last week I discussed 2 or 3 slides this lesson. It's okay, but I will start today beginning for this lesson. Accounting system. What is the accounting system? Accounting system is the how keeping we are accounting transaction for the business or any other organization. How we are keeping our business record, business transactions. This is the accounting system. It is a process for the transaction recording, records and bookkeeping. And accounting system is how you keep your business records. This is the definition of the accounting system. Similar one. How we are keeping our business records, business transaction. කොහොමද අපි අපේ එදිනෙදා ව්‍යාපාරික තොරතුරු ව්‍යාපාරික transaction record කරගන්න කියන එක තමයි business system accounting system එක අපි කතා කරන්නේ accounting system එකක් කියලා කියන්නේ ඒකට. You would put into your accounting system transactions such as invoices, money spent from the business, bank accounts, bills from supplies and money you have spent yourself on business cost. How we are spent our business, how we are keeping our bank accounts and bills, all the transaction of keeping a records, keeping a process we are called accounting system. This is the accounting system. How we are keeping our business record. This is the accounting system. We have 4 types of accounting systems. I explained you last week. Single entry system, double entry system, manual accounting system and computerized accounting system. Single entry accounting system means one-side accounting system. Some small companies are prepare one-side accounting system. Small business are want to how we are spent their money only for the accounting process. How we are spend their money, how we are sell his goods, how they are purchasing. They want one-side accounting system. එයාට ඕනේ යාගේ පොත් ටික විතරයි. ඔය small companies වල. ඒ කියන්නේ යාගේ අපි හිතමුකෝ එයාගේ cash book එක එයා යාගේ පැත්ත විතරයි enter කරගන්න. ඒකට අපි කියනවා single entry account system. ඒ කියන්නේ බඩු purchase කරාම එයා purchase කරා කියලා විතරක් ලියා ගන්නවා goods. ආයි තොග පැත්තේ පොත්වල එහෙම නැහැ. එයාගේ cash accounting කී විතරයි තියාගන්න. ඒ වගේ එක පැත්තක accounts විතරක් තියා ගන්නකොට අපි කියනවා single entry accounting system කියලා. මම තව explain කරන්න ඉස්සරහට ඊට පස්සේ double entry accounting system. Double entry accounting system means they had a double entry. Some they have purchasing goods. They entry credit to the cash account and debit on the goods account. This is the double entry. One transaction enter the 2 accounts. This is the double entry account system. Single entry system is all the transactions are entered the one side accounting, one account. Double entry account system are all the transactions entered for the two accounts, separate two accounts. Manual accounting system is they are prepare accounting of the manual, the handwritten, over some using methods. Another one is last one, computerized accounting system. Computerized accounting system are all the accounts and accounts statements are prepared by the computer software, computer package, or any other sophisticated packages. They are entered for the transaction amounts only. All are preparation and accounting preparation for the software or any other sophisticated system. These are the types of accounting system: single entry accounting system, double entry accounting system, manual accounting system, and computerized accounting system. We have 4 types of accounting system. We elaborate one by one. First one is what are the main accounting system? What are the main accounting systems? Accounting fields are 2 main accounting system. First one is the single entry accounting system. Another one is the double entry accounting system. Single entry accounting system are using for the small businesses, boutiques, shops, and body small businesses. Double entry systems are using all our business, big businesses, organizations, companies, any other wide range companies and wide range organizations. What are the main accounting systems? There are 2 types of accounting systems. The first is a single entry system, where a small business records every transaction as a line item in a ledger, one line item in a ledger. That is a single entry system. The other is the double entry system, where every transaction is recorded both as a debit and credit in separate accounts. Double entry account system records both as a debit and credit in separate accounts. Why is the accounting system used? Accounting system, why? Why we want to accounting system? Records our accounting transaction, our day-to-day business transaction, we want to records. That's why we want to accounting system. We want to prepare accounting statement, we want to prepare monthly account system, and any other. We want to record our day-to-day transaction, we want to accounting systems. Some companies want a one-line account system. Other wide accounting organizations, we want transaction system. All are want to keep their accounting records. That's why we want to accounting system. The intent of an accounting system is to record business transactions, summarize those transactions into an array, aggregated form, and create reports that can be used by decision makers to monitor, analyze, and improve operations. We want to accounting system prepare a records of a transaction system, and other parties want to decision making and analyze and compare with other companies and similar companies and past records. Who uses accounting system? We already know this. Please tell me one by one of your group. Who uses our accounting system? Please tell me. We already know. We discussed last lesson. Please tell me. Who uses accounting system? We already know you. Who's the using our accounting financial statements? Please tell me. Please read this slide. Please tell me one of your group.
Accountant.
Yes, another one.
Manager.
Yes.
Auditors.
Yes, sorry.
Auditors.
Yes, auditors.
Government officer.
Government organization, government officers. Any other? All are called interested parties. Investors, accountants, we are separated by internal and external parties. We are discussed with earlier lesson. Our accounting users, their accounting statement using internal and external parties. Internal parties are accountants, managers, chief financial officers, and internal auditors. External parties are external parties are consultants, business analysts, investors, consultants, external parties, and regulatory bodies. This is the those are using our accounting system. An accounting information system, AIS, used by companies to collect, store, manage, process, retrieve, and report financial data. AIS can be used by accountants, consultants, business analysts, managers, chief financial officers, auditors, and regulators. Regulators means regulatory bodies. Those are using our accounting system. Are you clear up to now? Any other clarifications or questions? Ask me. Students, we want to respond to you.
Clear, sir. Clear, sir.
Clear. Okay. Okay. It's okay. What is the accounting system important? I said earlier, we will want to record our financial transactions. It is important for accounting. Accounting is important as it keeps a systematic record of the organization's financial information. We want our transaction information keep a systematic record system. That is we call financial statements. Accounting is important as it keeps a systematic record system for organization. Up-to-date records help users compare current financial information to historical data. Investors, interested parties wants our financial statements compare with others. Compare with others. Other similar companies, or compare our past records, or anyway. That's why we want a accounting system. What are the components of accounting system? Components means using elements, using persons. Accounting systems components are people, preparation people, procedures and instructions, data, accounting software, information technology, infrastructure, and internal controls. Internal controls given by company or relevant organization. And procedures and instruction given by related company, related accounting organizations, regulatory bodies, or any other authorities. Data is a transactions, day-to-day financial transaction. Software means accounting packages, any other. Information technology structures are same. Internal controls are given by relevant organization. Internal controls, internal guidelines, any other. Internal controls maintained by related division, controlled and reviewed by relevant companies, internal audit department. And any other HR department and related departments in the company. This is the components of the accounting system. People, procedure and instructions, data, software, information technology, infrastructure and sophisticated item, and internal controls. This is the components of the accounting system. We can divide it accounting system two types, manual accounting system and computerized accounting system. Computerized accounting system. We discussed it earlier. We prepare our accounting system, financial statements through the accounting software, packages, any other accounting infrastructure, through accounting infrastructure. That is the computerized accounting system. Example of Tally, QuickBook, and Excel books, any other computerized software we using prepare our accounting statements. That this is a computerized accounting system. Only for the we enter the data, end of the month, end of the quarter, end of the year, we can get the financial statements. Computer prepare our accounting statements. We only for the enter the data, financial transaction. more companies nowadays using accounting system, computerized accounting system. Banks, any other organization, they can easier because some branches, head office in the Colombo and branches are island wide. They can manage one person in the head office. All the branches are input only data. And any day-to-day transaction. We can get this, they can get the financial statements end of the year from head office. The link with the head office, all the branches in world island wide. That is a computerized accounting system. Banks, any other financial companies, and some government entities are linked with the head office in Colombo. This is a computerized accounting system. A computerized accounting system is a software application that automates financial records and reporting process to make them fast, more accurate, and easier to manage. It reduces the manual entry of data, eliminates redundant operations, and reduce accounting error risk with built-in control. We are using accounting system. We can reduce and eliminate redundant operations and reduce accounting error and reduce accounting risk through the computerized accounting system. Classification of accounts. This is another lesson. These are small parties given by your module. We get the general knowledge only for this. For preparing accounting statements end of your module, we can get general knowledge, go through this slide and lessons. Accounting systems are one small part and classification of accounts another small part given by your module. You get a general knowledge for this lesson. Is it okay? Not getting much more this slides. This is only for the general knowledge for you. Is it okay, Puta? Tell me. Making general knowledge එකක් විතරක් ගන්න. අපිට accounts prepare කරද්දී අන්තිමට මේ tool එකේ දීලා තියෙනවා. ඒකයි. මොනවා හරි නොතේරෙන තැනක් තියෙනවා අහන්න පුතා. Is it okay no?
Okay, sir.
Okay. Is there another part of the classification of accounts? We can divide of the classification of accounts, modern approach and traditional approach. Some differences are here. It using separate accounts, modern than the traditional than the modern. So they using different accounting system, different accounts, separate accounts. In accounting, the accounts are classified using one or two approaches, modern approach and traditional approach. Modern approach. Modern approach using asset accounts, liability accounts, capital law owners equity accounts and withdrawal accounts and revenue and income accounts and expense accounts. Modern approach using those accounts. I elaborate one by one accounts earlier, before, after that. Accounting to modern approach, the accounts are classified as assets accounts, liability accounts, capital law owners equity accounts, withdrawal accounts, revenue income accounts, and expense accounts. These are using modern approach. I elaborate one by one. Asset accounts. Assets accounts are companies have assets, buildings, motor vehicles, some machineries, some tangible or intangible assets. Intangible assets means brand names, goodwill, and marketing concepts. After that, assets is all the vehicles, buildings, machineries are in the company. Modern approach using that company prepare a separate asset accounts. This is the modern approach account. Assets are things or item of value owned by business and are usually divided into tangible or intangible. Tangible means physical assets. We can touch vehicles, buildings, machineries are tangible assets. Intangible assets are we can't touch. Goodwill, marketing concepts, brand names, those are intangible assets. අපි මේකට සිංහලෙන් කියන පුෂ්‍ය සහ අස්පෘශ්‍යවත්කම් කියන. accounts කරපු අය දන්නව ඇති. අස්පෘශ්‍යවත්කම් සාමාන්‍ය accounts කරනවා. අපි business එකක් විකුණද්දි අස්පෘශ්‍යවත්කම් වලට අපි වටිනාකමක් දෙනවා. සාමාන්‍ය අපි හිතමුකෝ ඔය brand හොඳ brand name එකක් තියෙන company එකක් මංචි එක විකුණනවා කියලා. මංචි එක විකුණද්දි ඒ company owners ලට පුළුවන් මංචි කියන brand name එකට value එකක් add කරලා ඒකත් company value එක වැඩි කරන්න add කරන්න. මොකද මංචි කියන brand name එකට මිනිස්සු කැමති වෙලා තියෙනවා. ඒකට මිනිස්සු ගුණ වෙලා තියෙනවා. මංචි කියන brand name එකෙන් බිස්කට් හොයන අය ඉන්නවා. ඔය අපි රබර් සෙරෙප්පු හොයන්නේ බාටා කියලා. ඒ brand name එක most valuable. This is a intangible asset. Tangible assets are physical items such as building, machinery, inventories, receivables, receivable cash, prepaid expenses, and advance payment to other parties. That's a assets, tangible assets. Cash we can touch. Intangible assets normally include non-physical items, can't touch items, and rights. Example of intangible assets include goodwill, trademarks, copyright, patent rights, and brand recognition, etc. A separate ledger account form for each tangible and intangible assets is maintained by the business to record any increase or decrease in the assets. That is a modern approach system. Prepare a separate assets accounts, tangible and intangible assets, but mainly prepare tangible and intangible assets in the main assets account. Are you clear? Tangible and intangible. Some complicated here.
Excuse
Are you
me,
clear with that? Clear?
सर मैं इंटेंजिबल आपको चुट्टा क्लियर करना है सर.
Hari puta. Intangible assets කියලා අපි කියනවා tangible කියලා කියන්නේ අපි සාමාන්‍යයෙන් අල්ලන්න පුළුවන් වත්කම් වලට අපි කියනවා වාහන, ගොඩනැගිලි, යන්ත්‍ර සූත්‍ර, කෑෂ්, ලැබිය යුතු මුදල් ඒවා අපිට ලැබෙනේමනේ. ඒවා අල්ලන්න පුළුවන් ඒවට අපි කියනවා tangible assets. පෘෂ්ඨාත්කම් කියලා කියනවා. අල්ලන්න පුළුවන් ඒවට tangible assets කියනවා. intangible assets කියලා අපි කියන්නේ අල්ලන්න බෑ. නමුත් ආයතන සතු වත්කම්. ආයතන බ්‍රෑන්ඩ් නේම් එක. ඊට පස්සේ ආයතන පාවිච්චි කරන යම් යම් කොපිරයිට්ස්, ට්‍රේඩ් මාක් එක. ඊට පස්සේ මාකටිං කන්සෙප්ට්ස් ඒගොල්ලෝ පාවිච්චි කරන ඒවා අල්ලන්න බෑ. නමුත් ඒවට වටිනාකමක් තියෙනවා. අපි හිතමුකෝ දැන් බාටා කියන එකට මම කලින් කිව්වේ බාටා කියන කම්පැනි එක දැන් අපි දැනටත් ඒ බාටා කියන concept එකටනේ අපි අහුවෙලා තියෙන්නේ. සෙරෙප්පු දෙකක් ගන්න ගියාම අදටත් ඉල්ලන්නේ බාටා දෙකක් දෙන්න. ඒ වගේ බ්‍රෑන්ඩ් නේම් එකට වටිනාකමක් තියෙනවා. ඒ අපි හිතමුකෝ බාටා කම්පැනි විකුණනවා. රබර් සෙරෙප්පු කම්පැනි ෆැක්ටරි මැෂින් විකුණනට අමතරව බාටා කියන බ්‍රෑන්ඩ් නේම් එකට ලොකු වටිනාකමක් තියෙනවා. මොකද ඒකට මිනිස්සු හුරු වෙලා කම්පිය වෙලා තියෙන්නේ. ඒක නිසා ඒකට වටිනාකමක් තියෙන ඒකින්ද accounts කරද්දී ඒ වගේ brand names, copyrights, trade name, goodwill වලට කීර්ති නාමයෙන් වටිනාකමක් තියෙනවා. ඔය සමහර lawyers ලා ඉන්නවා
Excuse me, sir, can you hear me?
hello
Hello, sir.
කියන පුතා. What's your question? He has a more name in the society. Yes. Not clear, Buddha. Your voice is not clear. Please tell me, Buddha. නැත්තම් chat box එකට දාන්න ඔයගේ question එක. Some leading lawyers are in our country. He has a very good goodwill. I heard about Rienzi also Gujaratna. He has a very important goodwill and very marketed goodwill. And Vijaydas Rajapaksa. Or some famous names are, he has a very compatible goodwill. They are accountable. It is a intangible asset. ඒගොල්ලෝ ගොඩනගාගත්ත කීර්ති නාමය. ඒකට වටිනාකමක් තියෙන නමට තමයි මිනිස්සු හොයන් ඉන්නේ. ඒකට අපි කියනවා intangible asset එකක් කියලා. Are you clear? Students, are you clear, Buddha? Please tell me.
Yes, sir.
No issue near tangible and intangible. It's okay. liability account. Rupasara, what's your question, Puta? What should you have a question? Are you not clear me? Okay, Puta, okay. Liabilities. All the debitors and payable amounts are here in the company. It is a liabilities. Modern approach system are prepare another separate liabilities account. Debits, payable amounts to outsiders, and any other liabilities. Prepare separate accounts for liability accounts for those are transactions. Liabilities are obligations or debits payable to outsiders or creditors. This is a liability. The title of a liability accounts usually ends with the word payable. For the a transaction end with the payable, that is it is a liability amount. It is a liability. Company need to pay another parties. It is a liability. අපි මේකට කියන වගකීම් කියලා. මම තව කෙනෙකුට දිය යුතු දේවල් ගැන වගකීමක් කියනකොට ඒ වගකීම් වලට අපි කියනවා liability කියලා. ඒ කියන්නේ ගෙවිය යුතු දේවල්, payable amounts. All the payable amounts are liability for company. The title of liability accounts usually end with the words payable. It is a liability. Example include accounts payable, bills payable, wages payable, interest payable, rent payable, and loan payable, etc. All the payable amounts are liability. Beside these are any revenue received in advance, also a liability to the business and known as unearned revenue. It's a liability. Are you clear for liability?
Can you hear me?
Not clear. Loans are expenses, but we are payable, Puta. අපි loan එකක් ගන්න එක loan එක expense එකක් තමයි පුතා. loan එක අරගෙන අපි ඒක වියදම් කරන එකයි පුතා expense එක. but loan we are payable monthly, annually, or quarterly to the banks or any other financial entities. This is the වගකීමක්. Liability for company. Are you clear with that? Financial entities, any other organization given for us to money. This is a loan. We want to payable after that, that organization, so financial entity or banks. That is a liability. Cash coming from bank, deposit our bank, our accounts, so cash. We can purchase any other goods also there through the that account. That is the expenses, not the loan. We take a loan from bank, we payable to that amount monthly or quarterly wise against that loan. It is a liability, not the expenses. Is it okay? Is it okay, Buddha? Tanushan, are you clear? Okay, no response. Capital law, owners equity accounts. Capital law, owners equity accounts. Capital is the invested money from the parties for our organization. It is a capital, share capital, and any other equipment or invested by another parties for our company. It is a capital. Owners equities are same. Modern approach system, we maintain another accounts for capital and owners equity accounts. All the transaction, deposit some money and withdraw some money owners, they prepare and enter all the transaction, capital and owners equity accounts. Some owners are invested January month 5 million for the company, and they withdraw the money, some part of money, August to September month. We can debit the amount and withdraw an amount credit. It is the Sorry, Buddha, power is gone. Please make me a host, Buddha.
Done, sir.
Okay, sorry for the inconvenience. Power is gone now. I forget it. Okay, Buddha. Capital and owners equity accounts. Capital is the owner's claim against the assets of the business and is equal to total assets less liabilities to external parties. We can explain you clearly next slide. Next lesson is the accounting equation. Assets are equal to liability. We can explain clearly next lesson. Accounts equation. The balance in capital account increase with the introduction of new capital and profits earned by the business and decrease as a result of withdrawals and losses sustained by the business. All the details are entered to the capital law owners equity accounts. Owners capital and equity increased or decreased. All the transactions are entered in the capital law owners equity accounts. The clear said business and decrease and result of withdrawal and losses sustained by the business. All the transaction entered in the capital and owners equity accounts. In corporate form of business, there are many owners known as stockholders or shareholders, and the title capital stock account is used to record any change in the capital. Any change in the capital, we need to enter all the transaction to the capital law owners equity accounts. Withdrawal accounts. All the cash and assets withdrawal account, withdrawal items or amounts, we need to enter the withdrawal accounts transaction on modern approach system. Withdrawals are cash or assets taken by a business owner for his personal use. This is the same accounts, capital owners equity accounts and withdrawal accounts are same. For his personal use. In sole partnership and partnership, an account title and drawings account is used to accounts for all withdrawals. In corporate form of businesses, withdrawals are more systematic and usually termed and distribution to stakeholders. The account used for recording such distribution is known as dividend account. This is the withdrawal accounts. last one of the modern approach system, revenue or income accounts. All the revenues and incomes entered on this company. Revenue and income separate accounts prepared on modern approach system. All the revenues and incomes transaction are entered to this accounts. All the ලැබීම් ඔක්කොම ලැබීම් මේ account එකේ enter කරන්න ඕනේ කියලා සාමාන්‍ය modern approach system එකේදී use කරන මේක සාමාන්‍ය දැනට usual system ගොඩ වෙලාට පාවිච්චි කරන නැති system එකක්. නමුත් මේ system එක ඕගොල්ලන්ට දැනගන්න ඕනේ නිසා මම උගන්වන්නේ. Revenue and all the incomes are on the income transaction are entered to this accounts. Revenue is the inflow of cash to the company. And activities such as provision of service or sales of goods. The term income usually refers to the net profit of the business derived by deducting all expenses from revenue generated during a particular period of time. However, in accounting and finance, the term is also used to donate all inflows of cash resulted by those activities that are not primary revenue generating activities of the business. The business usually maintains separate accounts for revenues and all incomes earned by them. All the revenues and income transactions enter to these accounts. Expense accounts. Same. All the expenses by the company enter to this account. All the expenses any resource expended or services consumed to generate revenue is known as expenses. Example of include salaries, rent, wages, supplies, electricity, telephone, depreciation, and any miscellaneous expenses are entered to these accounts under the modern approach system. Please get the general idea for modern approach system. 6 accounts are here, modern approach system. Assets, liability, capital or owner's equity, withdrawal accounts, revenue or income, and expense accounts. 6 accounts are here under the modern approach system. All the each details enter to that relevant account under the modern approach system. Not get confused. This is the modern approach system. Are you clear modern approach system, Buddha? Any other clarification or questions are here? Ask from me. Are you clear? Are you clear up to now, Buddha?
Yes, sir.
Okay. Thank you. Another part. Traditional approach. we compare to our parties. Please see, modern approach are 6 accounts. Traditional approach are 4 accounts. According to the traditional approach, the accounts are classified in 4 types: personal accounts, real accounts, nominal accounts are, and valuation accounts. This is the traditional approach. Personal accounts. The accounts related to real persons and organization are classified as personal accounts. Organization are clarified real persons. Example was NDB account, Sarath account, Kamal account, or any other. Separate accounts are here this system. This is the personal accounts. They prepare a person-wise separate accounts under the traditional approach. They call personal accounts. The accounts related to real persons and organizations are classified as personal accounts. Example, persons accounts include Siribalas accounts, Gamages accounts, NBs accounts, NDB accounts, etc. The organization keeps separate accounts for each individual and organization for the purpose of ascertaining the balance due from or due to them. Organization prepare the separate individual accounts for each wise. They call personal accounts under the traditional approach. This is the personal accounts. Another one is real accounts. Real accounts means accounts related to assets or properties, liabilities owned by the business. They prepare separate accounts. Assets, liabilities, and any other things. We prepare another account, separate accounts for that. It called real accounts under the traditional approach. Please don't get conclusion. Please ask me. Real accounts are accounts related to assets or properties, both tangible and intangible, owned by a business enterprises. A separate account for each assets is maintained to account for increase and decrease in the assets. Modern approach here only for the assets accounts. All light in account. Real and traditional approach is real accounts prepare separate accounts. Motor vehicle accounts, building accounts, any other assets are prepare separate accounts. That call real accounts under the traditional approach. Nominal accounts. All the business are income, gains, losses, expenses are transaction in the nominal accounts. All the gains, income, losses, expenditure. All the expenses are here in the nominal accounts. All the gains, incomes, expenses and losses, transaction are entered to this account, nominal accounts. The accounts related to the incomes, gains, expenses and losses are classified as nominal accounts. These accounts normally serve the purpose of accumulating data needed for preparing income statements or profit and loss account of the business for a particular period, given period. Prepare income statements and or profit and loss accounts. It called nominal accounts. This is the valuation accounts. And the last one is the valuation accounts. Valuation accounts prepared by all the contra entries, not for the statements. Valuation account is an account which is used to report to carrying value of assets or liabilities in the balance sheet. Carrying value, depreciation and recovered amounts and depreciation of loan amounts, receiving amounts, receivable amounts are prepared by the transaction into the valuation accounts. Depreciation means assets, we have a depreciation annual wise. All the depreciation amounts in depreciation transaction enter to the valuation accounts under the traditional approach. Valuation account, also known as contra account. Contra account means not applicable to the financial statements. Valuation accounts is an account which is used to report to carrying value of an assets or liability in the balance sheet. A popular example of the valuation account is the accumulated depreciation accounts. Depreciation are also normally accumulated accounts. Accumulated amounts are here. Companies maintaining fixed assets in the books of accounts at their original cost also maintain an accumulated depreciation account for each fixed asset. In balance sheet, the balance in the accumulated depreciation account is deducted from the original cost of the assets to report it at its book value of carrying value. That is the valuation accounts. All the depreciation amounts are carrying from valuation accounts. Accumulated amounts are here, valuation accounts. Financial statement prepared, plant and machinery statement. It prepared, they get accumulated depreciation amount from valuation accounts. Valuation accounts must be prepared under the traditional approach. Are you clear separately traditional law approach, traditional and modern approach? Modern approach here, 6 account. Traditional approach here, 4 accounts. Personal, real, nominal and valuation. Are you clear up to now?
Yes, sir.
Tell me, the Nidhi Mata is it? Huh? Please tell me one of your group. Are you sleeping or not? No.
No.
Are you clear up to now, Buta?
Yes, sir.
මොනහරි ප්‍රශ්න තියෙන අහන්න පුතා, no issue.
Okay, sir.
Okay, we will get another section for your module, classification of accounts. We can get 3 types of accounts. We can get 3 types of clarify for accounting. There are 3 different classes of accounting, which are financial accounting, cost accounting, and management accounting. Financial accounting, we already know what it. Cost accounting, we discuss next lesson after the financial accounting. Management accounting is the last lesson of the your module. But I explain here now. Please tell me what of your group you know already what is the financial accounting. You already know. We discussed with you our first lesson. What is the financial accounting? Please tell me one of your group. එක්කෙනෙක්වත් ගත්තේ නැද්ද ගිය ලෙසන් එකේ මොකද්ද අපි කතා කරේ කියලා? අපි ඉවර කරපු ලෙසන් එකේ එක්සෑම් එකකුත් අපි තිබ්බේ. What is the financial accounting? No. Please tell me one of your group. 2 persons here know accounting doing by A levels. Done by A levels. Anyone know? Or don't know? What is the accounting? Financial accounting is the process of the preparing accounting statements. Collect of the data, prepare or classify of the data, and prepare the statement and present of the financial statement. This is a financial account. All 3 have their own characteristics and use. Further, they have different results as well as recording and maintenance. Different results they are using for. They have for 3 types of accounting system. These are the 3 types of accounting system. Accounting, we can divide 3 types of these. We can clarify classify three types: financial accounting, cost accounting, and management accounting. This is the financial accounting. We discussed earlier, all of the last lesson. We can define financial accounting as the process of recording, summarizing, and reporting. We told earlier last lesson. Recording, summarizing, and reporting. Is it financial accounting? Process of recording, summarizing, and reporting is the financial accounting. Various transactions that occur over period of given time during the course of business. This is the financial accounting. We gather and convert all the daily transactions into financial statements, balance sheet, income statements, and cash flow statements. In the preparation of financial accounting, uses a bunch of accounting principles. It given by, we told you, Chartered Institute and relevant authorities for us. These contain different rules and assumptions set out for the preparation of financial statements. We discussed earlier. There are various different rules and regulations that financial accounting uses for the preparation and presentation of the financial accounting. In India, all financial accounts are prepared in accordance with general accepted accounting principle. Sri Lanka also same. In the case of international public companies, international financial reporting standards applicable together with. This is the financial accounts. Process of accounting, summarizing, and reporting in the given period. It's called financial accounting. Definition of the financial accounting is this. Please remember this. Process of recording, summarizing, and reporting various transactions given time period. Is a financial accounting. We discussed earlier. Financial accounting prepare financial statement. Two types of methodology, two types of basis. We call accrual basis, cash basis, and combination of both of above. We discussed this last lesson. Accrual basis is we call, told you, ලැබුණා හෝ නොලැබුණා හෝ වර්ෂයට දාලා ආදායමත් ගෙව්වා හෝ නොගෙව්වා හෝ වර්ෂයට දාලා වියදමත් ගිණුම් ගත කරලා හදන accounts වලට අපි කියනවා accrual basis. Another one is cash basis. All the received cash amounts prepared by financial statements. මුදලින් ලැබුණු දේවල් විතරක් transaction විතරක් අපි ප්‍රයෝජනට අරගෙන හදන accounts basis එකට අපි කියනවා cash basis කියලා. Financial statement prepared these two type of basis, accrual basis and cash basis. Accrual method entails recording transaction as and when the transaction occurs and revenue is recognizable or expenses are certain and payable is the accrual method. In the case of the cash method, we record transaction on the basis of the exchange of cash. Only for the cash method. Are you clear? Financial accounting.
Yes, sir.
Okay. මොනවාරි ප්‍රශ්න තියෙන අහන්න පුතා මතක නෑ වගේ කවුරුත් උත්තර දෙන්නේ නැහැ. නැත්තම් Zoom එකකින් ලොග් වෙලා නැද්ද කවුරුත්? කම්පියුටරේ ඉන්නව කවුරුත් නෑනේ. එහෙමද? Another one is the cost accounting. These are companies using allocating of the cost relevant production or service. These are using allocating of the cost over the process of manufacturing or a product or providing service. This is the cost account. We discuss later. Cost account is another lesson for your module. Please get a general idea for this. Cost account is the process of recording, summarizing, analyzing, and allocating, mainly allocating the cost over the process of manufacturing the product or providing service. Cost account is mainly doing allocating of the cost for the product or service. It helps management to determine the cost involved in manufacturing a product or service by use of different cost accounting methods. Management can take a decision through the cost accounting system. We can determine, we can get an idea for how to develop this product, how to profitable of this product, go through the cost accounting. A product of services by use of different cost accounting method we discuss later. Further, it helps management to make organization cost efficient and capable. Cost accounting act as a controlling tool. This is the controlling tool for the controlling tool to the management have and managers can take a decision how to decrease this cost, how to introduce another product, how to decrease this cost, and what managers had for this product all the decisions are making for product and services go through the cost accounting. Cost accounting are elements, how elements, material, labor, and other expenses. We can divide it are direct and indirect. All the direct material and indirect material, direct labor and indirect labor, direct other expenses and indirect other expenses. There are different elements of cost accounting: material, labor, and other expenses. Direct and indirect are the further segregation of the above costs. Cost accounting are different type of cost. Fixed cost. Fixed cost means does not vary with the quantity of production or services. All are fixed. We reduce the production amount, we increase the production amount, not vary with the quantity of the production. It's called fixed cost, like salary, fixed wages, or something. And house rent, vehicle rent, or something. It's called fixed cost, not vary with the quantity of production or service. Fixed cost means cost does not vary with the quantity of production, like salary or fixed wages. Another one is variable cost. Variable cost means change the company, vary the cost, increase the production, quantity of production, increase the cost, decrease the quantity of production, decrease the cost. It called variable cost. Material cost, like variable cost. We prepare a helmet, we use a plastic. We prepare 100 number of helmets, we using 100 kilos of plastic. We prepare 50 numbers of helmets, we used 50 kgs of helmets. This is the vary with the production of quantity. It calls variable cost. Variable cost varies with the change in the quantity of production, like material cost and labor cost will increase with the increased level of production. Are you clear with cost and variable cost? Okay, thank you. Semi-variable cost. Semi-variable cost are some amounts fixed after the amounts are vary, like electricity bill, Some units are consumed is fixed. After that amount are varied. ඒ කියන්නේ එක amount එකකට යනකම් electricity bill එක equal ඊට උඩට ගිය ගමන් increase වෙනවා. ඒකට කියනවා semi variable. ඒ කියන්නේ එක පාර්ට් එකක් fix අනිත් පාර්ට් එක vary වෙනවා. Semi-variable cost maintain two elements of the cost. One is fixed and another one is variable. In this type of cost fixed part remain the same up to certain level of production, but changes after crossing that certain level, and variable varies with the changes level of production. That's called semi-variable of cost. Some part of fixed, some part of variable. This is the semi-variable cost. Another one is opportunity cost. Opportunity cost means some products via production dissolved under another production. Another production means we stop the another production. We prepare one production. We call prepare and stop another productions. Most of value amounts is the opportunity cost. One of production. We maintain the one production and stop the another productions. Most of the value production is the amount is the value of the opportunity cost. Opportunity cost is the cost of not earning profit from the opportunity of manufacturing a new products and sale due to limited resource. Or we can say with the limited resource, an organization has to forgo profit of the other production in addition to the existing. Other production into the existing. This is the opportunity cost. Other production is the most valuable amount. This is than the production amount, production quantity. This is the opportunity cost. Sunk cost. Sunk cost is the already done cost. This is not occurred for the cost accounting, no decision maker. Sunk cost is the cost which cannot be recovered once occurred, like a production. Certain production machinery required and purchased. Now we cannot recover the cost for machinery whether we carry out production or not. We already done cost. Machinery cost we are already done. We are production or not production, not recover it. Sunk cost is single means of the sunk cost is ගිලුණු පිරිවැය. මේ වෙනකොටත් දරලා ඇති පිරිවැය. Sunk cost is the cost which cannot be recovered once occurred, like production, certain production. Some example is machinery cost, vehicle cost, and building rental amount also check. We already done cost is the sunk cost. Different types of cost is the cost accounting, fixed cost, variable cost, semi-variable cost, and opportunity cost and sunk cost. Are you clear?
Yes, sir.
Okay. මේ අපි පස්සේ කතා කරනවා deeply මේ දැනට general idea එක විතරක් ගන්න මොකද cost accounting කියලා වෙනම module එකේ subject එකක්ම තියෙනවා ඔයගොල්ලන්ට මේ financial accounting වලින් පස්සේ මම ඒක පටන් ගන්නවා. දැන් මෙතන classification ඕන නිසා තමයි මේ මම ඒක ගන්නෙ. Another one is the management accounting. Management accounting or managerial accounting. Some people are called managerial accounting. Management accounting and managerial accounting are using for taken a decision. These are using ratios and some mathematical method are using for management accounting or managerial accounting. These are using for managers taken a decision, and investors are using for taken a decision for organizations and some entities. Management accounting or managerial accounting helps managers to make and implement business policies for better results. They are using management accounting. They use financial accounting information for this purpose. Management accounting is the different analysis tool for analyzing accounting information and to draw out best for the organization. The managers are using management accounting, take a decision for implement the business or organization. Four types of management accounting systems are here. Segregation of these tools under four heads according to their nature of the better understanding is as based on the financial accounting information. These are using ratio analysis, comparative analysis, through and analysis of fund flow statement and cash flow statement, analysis for return on capital employed. Ratios are profitability ratio, asset recovery ratio, and so many ratios are using for based on financial accounting system. Comparative analysis, past and current accounts are compared with these based on financial accounting system. Flow statement, cash flow and fund flow statements compare and take a decision for these financial based on accounting system. Capital of employee and return of analysis of are using for this system. Another part of based on cost accounting information, cost volume and profit alone analysis, incremental and differential account costing method, standard costing and variance analysis. These are based on cost accounting information. Based on mathematics, using for several types of techniques like operation research, linear program, network analysis, SPMC, and so many techniques are using for based on mathematics system for analyzing a cost accounting. based on future data information. Budgeting compare with the actual and budget variances analysis, business forecasting and project evaluations are using for this analysis. These tools are manager decide best for the organization to make it cost efficient and capable. Managers are decide what we are using these analysis. This is the cost accounting. These are we discussed. We'll discuss after our module. Last session of the cost management accounting ratio analysis for your module. Okay, I like to conclude now this today lesson. Are you clear up to now? Please respond me, Puta. Nidhi Dhanayane?
Yes, sir.
Well, clear. මොනවාරි issue එකක් තියෙන අහන්න. අර ෆෝනින් ගැන ප්‍රශ්නයක් තිබ්බා මේ සද්දයාගේ නම මතක නෑ මට. එයා ඉදි Ola can live out this lesson. Good evening, Buddha. Wish you all the best.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Okay, thank you very much. Are question